This is your chance to learn how to become a millionaire by reading old people's letters. Because nothing says fun like deciphering investment jargon and financial strategies instead of, playing video games or watching TikTok. So go ahead, kids, ditch the Fortnite and dive into the thrilling world of Warren Buffett's shareholder letters. Who needs Fortnite dances when you can master the art of compound interest? It's time for a thrilling math lesson. Let's talk about compound interest and how it can make your piggy bank grow to unimaginable heights. Who needs a piggy bank anyway? Just invest in Berkshire Hathaway and watch your money turn into a magical beanstalk that grows to the sky. Just remember to thank Warren Buffett for his oh-so-exciting shareholder letters that made this all possible. Who said finance can't be fun? Warren Buffett, the grandpa of investing, has a goal to make his company Berkshire Hathaway super rich by owning lots of different businesses that make lots of money and have good leadership. He doesn't want to just get bigger for the sake of being bigger, and he doesn't want to sell off parts of the company unless they're not making any money or have bad bosses. Instead, he keeps the money the businesses make and puts it back into the company to make it even richer. Isn't that just thrilling? All right, young Padawan, let's talk about how Warren Buffett runs his company, Berkshire Hathaway. He doesn't like to borrow a lot of money or sell parts of his company unless he gets a really good deal. He's been writing letters to his friends for a long time, and they've gotten longer and longer over the years. In his most recent letter, he talks about how important it is to own really good businesses that make lots of money and are run by great leaders. He also says that the basic principles of investing haven't changed much over time. So, remember, kids, own great businesses, make lots of money, and be a good CEO. Reading Warren Buffett's letters is like getting a secret code to become a successful investor. If you follow his advice, you can make good money and keep your friends, or in this case, shareholders, happy. It's like having a billionaire friend who shares his wisdom with you. Berkshire Hathaway owns lots of different businesses. Some of them are like big American companies you might know, some are from other countries, and some are like partnerships with other companies. The goal is to own businesses that are really good and can make lots of money for a long time. It's like collecting a bunch of really cool toys that never get boring. Business toys, that is. Warren Buffett doesn't just pick random stocks to invest in. He's like a kid in a candy store, but instead of picking candy, he picks entire businesses to invest in. He wants to own the whole candy store, not just a few pieces of candy. Berkshire Hathaway has 4 really big and important businesses that make up most of its value. These include insurance companies, Apple, a big railroad company called BNSF, and Berkshire Hathaway Energy, which is like the superhero of electricity and energy. Berkshire's insurance business is like a magic trick. It grows bigger when the economy grows and when prices go up. The company always tries to be good and honest, and it has a lot of money to help it do good things. Apple is like a super cool friend that Berkshire made in 2016. Since then, Apple has grown a lot, and now it's a big part of Berkshire's success. You can watch my other video regarding how Buffett just dumped $13 billion of Apple shares. Berkshire Hathaway Energy is like a superhero that makes electricity and energy for lots of people in the US. It's led by 2 super smart guys named David and Greg, and they've turned it into a really powerful company. Berkshire also owns other publicly traded stocks and wholly owned businesses. Buffett is known for being honest and straightforward when communicating business results, and he would be the first to publicly state what is happening with accounting earnings when communicating business results. He does not want investors to purchase shares in the company if they are being misled or if the price of the stock is trading far above its intrinsic value. Buffett is like a really honest friend who always tells you when he messes up. He's not afraid to admit when he's made mistakes in the past, and he's always working to fix them. This honesty makes people trust him even more because they know he's not hiding anything. Buffett's way of talking about his business successes and failures is like having a really good conversation with a friend. You know you can trust what he says because he's always been upfront and honest with you. This honesty has helped him build a big group of loyal fans and a great reputation in the business world. For example, in his 2016 annual report, he talked about a big mistake he made back in 1993 when he bought a shoe company called Dexter for $434 million. But guess what? The company's value went down to zero right after he bought it. Buffett was like, "Oops, my bad," and promised to learn from his mistake. Buffett is so confident in his company, Berkshire Hathaway, that he's been buying back its own shares because he thinks they're a great deal. This is like saying, "Hey, I think my own company is so good that I'm going to invest in it myself." When Buffett writes his letters, he doesn't use big, complicated words. He writes in a way that anyone can understand. It's like he's talking to you, not at you. He wants to make sure you know how the company is doing and what it plans to do in the future. Buffett knows that having good managers is super important for a company to be successful. He looks for managers who are smart, honest, and work hard. He also wants managers who will do the right thing, even if they're not getting a reward for it. Buffett uses something called stock options to make sure the managers are working to make the company better, not just to make the stock price go up for a little while. But he knows that stock options aren't perfect because sometimes they can make the managers do things that aren't good for the company in the long run. So Buffett tries to find managers who will do the right thing, even if they're not getting a reward for it. It's like finding a good friend who will help you move, even if they are only getting paid in pizza and no beer. Buffett thinks that the CEOs at his companies, including Berkshire Hathaway, are really special. He gives them simple rules to follow, like always doing what's best for the company in the long run. This might sound like common sense, but it's actually pretty rare in the business world. Buffett likes to work with CEOs who own a lot of shares in the company, just like he does. He thinks this shows that they really care about the company's success. In one of his old letters, Buffett thanked the bosses for making the company a lot of money. He also said that the company doesn't fire them just because they get older. He compared good CEOs to superstars, saying you wouldn't get rid of them just because they have a lot of candles on their birthday cake. Buffett has always been good at finding bargains. He likes to buy companies that have good leadership and treats them and the people who own shares in the company like partners. He wants the people who own shares to think of themselves as part owners of a business that they plan to keep for a long time, like owning a farm or an apartment building with family members. In all of Buffett's letters, he shows how much Berkshire's value has changed over the years and how well the company has done since he started running it. He shows how much the company's value has increased from year to year, which is a good way to see how much the company's stock is worth. Buffett used to show how much the company's value increased by looking at the book value, which is like the price of all the things the company owns. But as time went on, he realized that the book value wasn't as important as it used to be. So now, he just shows how much the company's stock value has increased. Buffett thinks that predicting how much the company will earn in the future is like trying to guess the future, and it's often not very accurate. He thinks that investors should be careful of CEOs who make big promises about how much the company will grow. Some of these CEOs might be right, but others might be just saying what they think people want to hear. In 2000, knew that Coca-Cola was probably worth more than it should be during the tech bubble. But even though they owned a lot of Coca-Cola stock, they decided not to sell it. Buffett doesn't like to sell good companies that Berkshire owns, and they're also not quick to sell companies that aren't doing so well, as long as they think they can still make some money. In 2017, Buffett said he was wrong about his idea about IBM, and decided to slowly sell their shares in the company because they were facing more competition than he thought. He also looked at Apple in May of 2024 and decided that he was more sure about Apple's future. Looking back, this was a good decision for him. Buffett likes to keep the companies he owns for a long time. He thinks this helps him focus on making the companies grow and make money, instead of trying to make fancy predictions or making mistakes with how he uses the money. He wants to be seen as someone who buys good companies with good leadership. He thinks that most people spend their whole lives building their businesses, getting better at what they do, and learning new things. But they only sell their business once, and it's often a stressful time with pressure from people who sell things, brokers, who pressure the CEOs for a commission regardless of the consequences to the buyer and seller. Berkshire Hathaway likes to buy companies and keep them for a long time. They don't try to change the companies they buy. Instead, they adapt to how the companies already work. Buffett wants the people who run the companies they own to keep some of the company for themselves. He helps them make big decisions about how to use the company's money, how much to pay the leadership, along with who should be leading the company. When Berkshire buys a company, they use real money, not borrowed money. They don't use the companies they own as a way to get loans. Buffett wants to buy companies from people who really care about their business and appreciate all the hard work they've put into it. Buffett doesn't try to make the price of Berkshire's stock go up as much as possible. Instead, he wants the stock to be worth about the same as the value of the company itself. That way, the people who own the stock can benefit from how well the company is doing while they own it. Buffett wants his shareholders to think of themselves as long-term owners of the company. He wants them to stay with the company for a long time, not just to make a quick profit. Buffett's goal with his letters is to be honest and tell his shareholders what they would want to know if they were part of the company. Warren Buffett likes to buy shares in companies when the price of those shares is much lower than what the company is really worth. He bought a lot of shares in the Washington Post in 1973 when the price was really low compared to what the company was worth. Most people who study companies in the stock market would have said that the Washington Post was worth between $400 million and $500 million. Buffett's way of thinking about investing comes from a guy named Benjamin Graham, who said that the secret to successful investing is to buy shares in good companies when the price is much lower than what the company is really worth. Learning and studying are really important to Buffett for doing well in games like bridge or chess, or for picking stocks to buy. He talks about a farm he bought and how he thought about how much money the farm would make each year. Buffett's basic ideas about investing include not needing to be an expert to make a good return, thinking about how much money the investment will make in the future, not trying to make a quick profit, not worrying about whether the price of something you want to buy will go up or down, having fun with investing, and not making big predictions about the economy or listening to what other people say will happen. Buffett is really focused on what he thinks is the true value of a business or investment, not on how much the stock price changes every day. He recognizes that when fear occasionally strikes, it offers great opportunities to buy. A climate of fear is your friend when investing, but a euphoric world is your enemy. Buffett's quote during the extraordinary financial panic in 2008, "If I had owned 100% of a solid business with good long-term prospects, it would have been foolish for me to even consider dumping it," highlights the importance of investing in the right business or investment. Buffett is now 93 years old, but he still spends a large portion of his time reading daily. His business partner, Charlie Munger, passed away in November of 2023.